welcome back. Looking ahead to key stories investors are watching in India today. The country's federal cabinet is scheduled to meet later today. Tata Chemicals will be holding the annual shareholders meeting, and the Reserve Bank of India is set to auction off $2.6 billion worth of T-bills. Looking at Nifty futures, pointing to a higher open up by 0.2%. Of course, India starts trading in about 7 minutes.
Okay, well, we got the plunge in oil prices providing a bit of relief to India, which, like other countries, has been struggling to contain rising inflation. Our next guest expecting a consumer price inflation prints for the next 2 quarters to still exceed 7%. Let's discuss this and more with Madhavi Arora, lead economist at Emkay Global. Madhavi, thank you for joining us. It's, of course, taking its toll on the rupee, which continues its search low. We had at least one program on this show yesterday, one person saying that we could see an 82 handle for the rupee. How concerned are you about it?
I think the sharp widening of CAD along with large equity portfolio outflows that we have seen since October have essentially kept BOP under major pressure, especially in the recent quarter. And generally on a seasonal basis also you see rupee tend to not perform very well in the first quarter of fiscal year. I think the pressure continues to remain. I have a sense that we probably will be seeing further pressure with regard to equity portfolio outflows in emerging markets, including that of India, given the valuation are still very high. That said, I think you have the central bank which has been intervening in both the spot as well as forward market since April, and my sense is that they probably would have intervened to the tune of 14-15 billion in the month of May, and June as well has seen meaningful intervention both in forward and futures markets. So I think to some extent, rupee pressure is going to sustain, and central bank probably is going to be still there to ensure that we don't see much volatility. That said, my sense is that RBI probably would be reorienting its FX intervention strategy and may eventually let the exchange adjust to new realities, although in an orderly fashion, and let it act as a natural stabilizer for policy action functions.
Exactly, but the thing is, we're already seeing some signs of second-round effects from consumer prices going up. We've got cost push pressure now, perhaps being met with some demand pull ones as well. Does that concern you?
Yes. So essentially, again, the inflation trajectory looks to be very uncertain at this point in time. There are a lot of fluid situations around that, could change the trajectory of global inflation as well as domestic inflation. Geopolitical tension still seems to be pretty uncertain. To some extent, the supply side measures which were taken by the government should help alleviate some cost push pressure. Especially the recent cut in excise duties, which essentially have led to lower petroleum product prices. Plus, the current sharp fall in crude prices should also help. We are tracking the upcoming June inflation around 7%. So clearly, we probably may have peaked out as far as inflation is concerned, but the next 2 quarters still should see inflation close to plus 7%, which I think should pressurize the Reserve Bank to again front load their policy reaction function.
The government has a fiscal deficit target of 6.4%. Is there a sense that it will meet that target?
So we are tracking the fiscal deficit around 6.6%. Essentially, what the government of India has done with regard to windfall taxes on production of petroleum crude and excise duty and export of petrol and diesel should ideally yield them roughly close to around 1 trillion rupee, which is around 0.4% of GDP for the rest of the year. But that said, my sense is that probably they could offset that windfall gain that they may make by probably cutting excise duty further on fuel prices and letting the OMCs, which are reeling under huge under recoveries of more than 2 lakh crore, enjoy some kind of a margin gain. So I think to some extent that could be offset, and my sense is that net the estimated gain of the recent windfall taxes would not be more than 0.25% of GDP, which implies that given other fiscal push and pull factors that are already existing, the fiscal deficit could end to at around 6.65% as against 6.4% that they have budgeted.
All things considered, Madhavi, what do you view as the biggest risk for the Indian economy?
I think to some extent, of course, the oil factor. I don't know where it's going to settle. We are now talking about oil crashing to a 65, 70 base balance as far as some global commodity analysts are concerned. But my sense is that this global energy order is probably going to change for good, and we may see oil sticky for the next 2 or 3 years, which could be big problem for emerging markets, especially the ones which are importing the oil. And plus the the front-loaded policy tightening that is happening in the West would again have very tight financial conditions, which could lead to hard landing in the West, and probably would have spillover back home as well.
Madhavi, I've just got to interrupt you for a second because you have some breaking news at the moment. It's in the crypto space, as we see a lot of companies under pressure. We've got Voyager Digital this time. It's filing for Chapter 11 in New York. This news is coming through. You can see the share price and the price action there. We did see it much lower down in the session, something like 34% down in the previous session. So where we go, this is, it looks like Bitcoin at the moment also under pressure, still below 20,000, Ether 2.7% to the downside. So Madhavi, that's what's going on in the crypto space. I don't want to go there with you, but let's have a look at what your main fear is, what you think the biggest headwind is facing India currently. And, we do have the probability or the possibility we might get a normal monsoon, which is a positive. What about the rest of the whole sort of contours of what's happening?
So I think India growth story again could be divided into two halves. One is the global aspect, which is currently clouded by considerable uncertainty. Back home, we are seeing at this point in time still pretty mixed, economic variables, but I don't think that we are essentially seeing any kind of a secular uptick in the Indian economy, and I think the spillover in the rest of the world will eventually fall back home. And to be sure, we really don't have any secular growth lever as such at this point in time, except for the government of India, and we need to see how much support they can really provide. Clearly, the private economic agents have been missing in the Indian economy growth story since 2017-18. I think that could probably continue. This in conjunction with what would happen in the rest of the world, could also have a very sharp spillover. We are already looking at a twin deficit problem revisiting. I think we could be in a tough situation. But that said, given that India is still a domestic-driven growth story, we could still have some kind of a decoupling in the immediate run, but not medium term.
So what is the worst-case scenario for India for 2022, Madhavi?
At this point, I'm looking at growth around 7%, assuming that Brent will settle at 105, 110, roughly. I think if Brent goes to a 140 plus on an average, or there are certain forecasts which are you're talking about 300, which I don't think will probably happen in a normal scenario. I think we could see the twin deficit, as I said, could revisit. The growth could actually plunge to a less than Brent 300 plus level. I think at this point in time, my risk scenario seems to be pretty balanced, and I have a sense that we should be able to sail through with some pain, and probably will still come out to be an outlier in the emerging market space.
Madhavi Arora, Emkay Global, thank you so much for your insight today. Let's check on the Indian market. Been trading for about a minute.